Before we begin, let's walk through our webinar platform together. Each of the buttons at the bottom of your screen relate to sections in the ON24 console. The speaker view is where you will see our presenters throughout the webinar. The slide view is where you'll see the accompanying slides. You can resize these widgets for a larger or smaller view. You may also follow along with a PDF version of the slides that can be found in the Related Content widget. In the Related Content section, you can access any accompanying materials for this webinar. This includes a PDF copy of the slides and many times will often include related resources. Using the Reaction button, you can react to content throughout the webinar. Reactions from our audience throughout the webinar will float along the console screen. Use the Q&A section to ask questions directly to our speakers throughout the presentation. In the Speaker Bio section, you can find out more about our presenters, including their contact information. If you need technical assistance, please use the Help button below. Many times, technical issues can be resolved by opening the webinar in Google Chrome or refreshing your browser. Finally, the Evaluation button contains our post-webinar evaluation survey. Here is where you can share your commentary and feedback on the presentation. We hope you enjoy our free webinar. Now, let's get into today's topic.
All right. Hi, everyone. Welcome, and thank you all for joining us here today for Fraud Files, Assessing Nonprofit Fraud Risks. Insert spooky music here. Before we get started, we have a few more logistics to go over. This is an hour-and-a-half webinar that is eligible for CPE, and that is our treat for you. So if you would like to get CPE, please note we will not be using polling questions today. Instead, we will have attendance checks that will pop up about every 13 minutes or so. So you will hear a ding once it does. And once you hear that ding, you will need to click directly on the screen on the attendance prompt. You will need to do this for 5 out of 6 attendance checks. And by the end, if you've responded 5 times, a 6th one will not appear. And you can track your progress in the Earn CPE widget. Our marketing and training support team members are here, and they'll respond to CPE questions and other troubleshooting in the Q&A. So hopefully that'll be the hardest thing you'll have to do in this hour-and-a-half. So we want your participation today. So we want you to use that Q&A box to drop in your thoughts, comments, questions, and answers that we're asking throughout today's session. And we'll try to get to as many as we can during the presentation, and we hope to save some time at the end for final questions. And finally, our slides are available for download in the Related Content widget.
Now, I'd love to introduce both Jen and I and YPTC. Your Part-Time Controller is a professional services firm that specializes in nonprofit financial management with over 30 years of nonprofit expertise. Our services include accounting, reporting, data visualization, and best practices, to name just a few. Our network of almost 800 staff have seen it all, helping over 2,200 clients throughout the United States, as well as clients in several other countries.
So let's now tell you who we are. So I am Jen Blasi. I'm a manager at YPTC based out of Philadelphia, and I've been working with or for nonprofits for the last 12 years or so. Prior to YPTC, I've worked as an external auditor, a forensic accountant, and a nonprofit controller and CFO. And with me here today is my colleague, Jackie York.
Hi, I'm an associate with YPTC. I'm also in the Philadelphia market. I've served on several nonprofit boards, and I've been an external auditor and an internal auditor.
So YPTC does a free webinar each month, and we cover all kinds of current events and technical topics. And on our website, you can sign up for upcoming webinars and get access to our archived ones. And every October, in the spirit of Halloween, we focus on anti-fraud topics. And we talk about how frightening and scary fraud can be. And then we provide you with treats and practical takeaways to help protect you from being tricked. Jackie, see what I did there with the Halloween puns, treat and trick?
I did, Jen. Thank you. And I do have a spooky feeling that there will be more where that came from.
I think you might be right. So Jackie, can you believe this is our 4th annual anti-fraud webinar? We were just babies when this started.
We absolutely were. So, but before we move on, let me ask you, why do you have such an interest in fraud, Jen?
So I think, as a former auditor, fraud was always a risk that we had to stay on top of. And you just don't know what to look for if you don't even know what some of the possibilities are out there. These fraudsters keep coming up with the wildest things. And I have to mention, to start my career, I was impacted by fraud. I worked for a public accounting firm that had a fraud issue. You might have heard of a little company called Enron. And so I was impacted very early in my career by fraud. In my role as a forensic accountant, I got involved with some really fascinating fraud cases relating to financial statement misstatements. And I'm sure I'm not alone in finding it way more interesting to hear and see the things that went wrong as opposed to the things that went right. So fraud is always just a really interesting topic for me. And as I've gotten more and more involved with nonprofits, I just have a soft spot for wanting to help protect them from fraud. They can't afford to even lose $1 to fraud. So I'm really passionate about it. So let me flip it, ask you the same thing. What keeps you coming back here to talk about fraud?
So I was really lucky. Almost 20 years ago, I served on a federal fraud grand jury. It was for 2 years, and we would meet every Thursday, review evidence, and determine if a case should go to trial. And I know that a lot of people think that fraud is a victimless crime. And in reality, I heard from people who lost everything. They lost retirements, their families, and in one instance, someone actually lost their life, all because of fraudsters. And I really care about nonprofit fraud because there's such a high reputational risk for nonprofits, and I like to see the good guys win.
All right, then let's get to it. So today's agenda, we're going to first talk about assessing fraud risk, how to spot and prioritize what matters most. And then we're going to take a spooky tour through our haunted Historical Society of Transylvania, which is our fictionalized nonprofit that is full of very real world risks. And then we're going to save some time to wrap up and do some Q&A. So Jackie, let's get started talking about assessing fraud risk.
All right. When I attend these type of webinars, the presenters really talk about assessing your risk. And I always wish that we had spent more time discussing what that actually means. So that's what we're going to do today. And our goal is to make this as helpful and applicable to everyone at your organization as possible, so that you can use this webinar recording and share it with your full teams as a great start or continuation of your anti-fraud training. As Jen mentioned, we're going to be taking a very spooky and very fictional Historical Society of Transylvania as our organization to assess. And it'll be a spine-tingling 90 minutes. And at the end of the webinar, you should have an easy outline for how to assess your organization's fraud risk. But let's start at the beginning. Let's make sure we're clear on all of the things we talk about when we talk about fraud. So fraud involves the intentional deception to cause a person to give up money or property. So we're talking about intentional, purposeful, knowing actions taken by a fraudster who wants to trick us. Anti-fraud measures are designed to prevent fraudulent practices.
And there are three main types of fraud. So asset misappropriation, that's when someone steals or misuses an organization's resources for their own good. We have financial statement misstatement and also corruption. And Jackie, we can't talk about fraud without talking about the fraud triangle. That's been around since the 1950s, and it is used to explain three key elements that lead to increased fraud risk. Now, two of those elements on the sides there focus on the fraudster. So the pressure that motivates the fraudster to commit fraud, and rationalization, which is how they justify their actions. And then the base there that we're showing, that third element, that really focuses on the conditions that exist at the organization that allow fraud to occur, and that is opportunity. Last year in our 2024 webinar, we talked about fraud risk being much more complex than just these three elements. And we talked about needing to go beyond this triangle when considering fraud risk. So we expanded our triangle into a 3D pentagon, adding more human elements about the fraudster, like capability, integrity, and whether the fraudster is internal or external to the organization. But focusing on the fraudster, that's pretty challenging. These elements are hard to observe, especially in this hybrid or remote work environment. So it's much more effective to focus on the victim organizations and what elements they can control. And those are reducing opportunities for fraud and creating and maintaining a strong ethical culture.
Jen, that is literally so much to think about.
I know fraud is a really complex topic, but we can make it simple. Today, we're going to focus just on reducing opportunities for fraud because that is the element that organizations have the most control over.
It's obviously complicated to run the slides and read at the same time. So I apologize, everyone. Okay, but let's talk about fraud specifically at nonprofits. Fraudsters often target nonprofits due to the opportunities available. Nonprofits often operate with limited staff and budgets, meaning fewer checks and balances. Where we have limited staff and resources, we often find that there's inadequate oversight, fewer functioning internal controls, and not enough fraud awareness. This culture of trust and generosity that we find in nonprofits can also create blind spots. And all of these factors make nonprofits attractive targets for fraudsters.
And Jackie, fraud costs a lot of money, especially at nonprofits. The Association of Certified Fraud Examiners issues a global report about fraud every other year, and 2024 was the most recent report. So while these stats are scary, I've got some bad news for you. The reality for nonprofits is far more frightening. These stats are only based on internal frauds, what we call occupational frauds. So these numbers are likely significantly understated because they're not even considering the impact of external frauds, which we know are on the rise. And what's even more scary, the ACFE study only covered fraud cases that got reported and were investigated. So it's not even reflecting the actual number of frauds happening. And that means that the real frequency and severity of fraud is likely much higher, especially for nonprofits, because we know nonprofits are less likely to report and prosecute fraud. And the main reasons for that include the fear of bad publicity, loss of donor trust, shame or judgment from the community, and then cost versus the low recovery. So investigations rarely recover stolen funds. So many nonprofits just cut their losses. And instead, they handle fraud internally, either through discipline, termination, private settlement. But when fraudsters are not reported, they have the opportunity to move on and target other nonprofits. And so not only do they profit financially from fraud, they aren't even prosecuted.
Jen, I want to stop you there and say, I literally just read an article yesterday about this very thing. A chief operating officer from a health foundation has been charged with embezzling millions. And I have this direct quote from the article. Quote, soon after she pleaded guilty in mid-September, a person submitted a critical letter to the judge before her sentencing on November 25th, an unusual move. I trust you will consider before sentencing, the letter read, the fact that this single person can completely destroy the confidence individuals may feel when it comes to charity. It's not just the amount of money she has stolen, but it is the impact on all charities. When something like this occurs, there needs to be a significant punishment to send a signal to others that this is not acceptable in our society.
And Jackie, that really highlights for me that fraud doesn't just damage one organization, right? It affects the whole nonprofit community. So if we only protect ourselves, we leave others exposed. So nonprofits that stop fraud, I think should actually be praised, not blamed. They've helped prevent more losses and they've protected others. And so by sharing our experiences and the risks we see, we can help each other fight fraud together.
Okay, so thinking about and talking about fraud doesn't have to be scary or complicated. Fraud risk is just like any other business risk that needs to be addressed. And I bet a lot of you think about cash flow risks or funding risks. Well, fraud risk should be no different. Today, we're going to simplify the process of addressing risk to something manageable so that we can all leave here today feeling confident about taking at least one step or maybe a few steps forward to make progress in reducing fraud risk. And a great first step forward is to start thinking about fraud at our own organizations and how to stop it. Doing a fraud risk assessment does not have to be complicated. We can break it down into 4 simple steps. We're going to talk about each of these 4 steps in more detail.
All right, so first, you have to think about your own organization and identify where are you vulnerable. So think about all the potential areas of fraud risk, not just where it's been previously, but where it might be lurking. And this is a proactive exercise. So for those of you who are worriers and think of everything that could possibly go wrong and assume the worst, this is for you. This is a great activity for you. You're going to thrive here. So you want to start simple. Start thinking about where are the opportunities for fraud at my own organization, and make a big list of all those risks that you identify. The next step is you're going to assess each of those risks that you just identified on your list, and you're going to rank them. So assess which risks are more likely to occur than others, and which risks are going to cost your organization the most. And that could be in either dollars or reputation.
Next, prioritize what to tackle first. I'd recommend starting with some quick wins. Once you have success, you're going to feel some momentum and you're going to keep going. We want to build your confidence. So start with the easy stuff that just smacks you right in the face. Then focus on risks that are both highly likely and high impact. Again, in dollars or reputation. So what should this look like? Let me start by saying, do not Google fraud risk matrix. You're going to find all kinds of scary looking templates, spreadsheets, scorecards. It can be really overwhelming, but it doesn't have to be. Don't get bogged down with all of the templates and guidance out there. You can keep it simple. Here's the framework we're going to use today and that you can use when doing your own fraud risk assessments. Focus on the quick wins, do the easy stuff, and make some progress. Then you're going to want to focus on the high risk areas. That's the intersection of fraud risks that are highly likely to occur at your organizations and the ones where there could be a high impact, whether that's in dollars or reputation. It really can be this simple. And remember, a fraud risk assessment is a hands-on exercise. It requires more than just sitting at your desk and filling out a template you downloaded. It's not just a template or a worksheet. It's a way of thinking, a mindset that includes critical thinking and a dash of skepticism. Once you adapt this mindset of thinking about fraud risk wherever you go, you'll be off to a great start.
So now that we've identified, assessed, and prioritized our fraud risks, the last step in our fraud risk assessment is really to determine how to respond to these risks. And the approach might be different for each of the risks you identify. For instance, you might choose to focus on prevention. And so you might want to separate duties, provide anti-fraud training, for example. You may decide you want to transfer the risk. So maybe you invest in insurance policies like cybersecurity insurance, or maybe look at a fidelity bond. You may just decide to accept the level of risk. If fixing the problem costs too much, you might just choose to live with the risk. Or you might choose to just stop doing that risky activity if it's not worth it to you. So we can use this simple framework to organize our responses into clear, manageable timeframes. And you can feel progress with the quick wins, and you can plan for the responses that may take a little bit longer of a period of time to put into place. So start thinking in 30, 60, and 90-day timeframes and map out what you can accomplish in each. And this is a pretty simple way to get started. And again, that is our goal here today.
And remember, be strategic. You don't have to be perfect. Focus on some quick wins to boost your confidence, and then begin to focus on highly likely and high dollar, high reputation impact risks. You don't have to address every possible risk the first time you do this. You need to understand how your organization works and concentrate on these areas that are the highest risk. All right, Jen, I think we're ready to do a fraud assessment. I have seen some interesting comments in the chat. We're probably going to take a look at these when we get to the end of our first room in our Haunted Historical Society. Now, I'm going to tell everybody while we do this walkthrough, I also want you to take a seat, relax, have a drink, have something to eat, and think about your own organization. Are there any similarities with our Haunted Historical Society? And I will also tell you, for the more serious minded out there, we're going to be a little silly. I think the kids call it, we're going to be a little cringe. But sometimes being silly allows us to approach hard things in an easier way. So feel free to take off your serious work face and have a little anti-fraud fun.
All right, here are the rooms that we're going to walk through. So we're going to enter into the front desk. We're going to go into the accountant's office. We're going to go into the executive director's office, and then we're going to check out the employee break room. And in each of these rooms, we're going to talk about the fraud risks that we have seen, some obvious and some not so obvious ones. And you may have others, as Jackie just mentioned, so please drop them in the Q&A. We'll also then be sharing some anti-fraud tips to respond to the risks that we identify. And then ta-da, we have a fraud risk assessment.
Feel free to take notes, but if you miss something, a summary of our discussion will be on the slides after each room. Just so you know, you can resize the slide widget in order to make the slides bigger. You'll also get a replay of the webinar in a few days. I just want to say, as an internal auditor, I was a department of one. And this is how I used to do my assessments. I go room by room, department by department, making a list of all the risks I could think of, and then I'd assess which ones to prioritize so that I could focus my efforts on the risks that were most likely to happen and cause the most damage. So I can tell you from a firsthand experience, this is doable. Also, as you play along with us, I want you to think about how you can implement this in your organization over a 30, 60, 90-day time frame. What are some quick wins and what will take a little longer? Where would you start?
All right, here we go. Let's step inside the Historical Society of Transylvania. Ooh, what do we see first? I see a front desk with a little gift shop kiosk. And wait, is that a cobweb in the corner? Is that a skull with glowing eyes? Are those for sale in the gift shop? Jackie, did you bring your wallet?
Jen, back on task. What else do we see?
All right. I see a box of cash at the front desk. I see a computer that has some sticky notes attached to the monitor. I see some gift shop inventory, and that looks to be a donation jar that seems to be left all alone there on the front desk. And, I don't see any employees. It's eerily empty here at the Historical Society of Transylvania. It seems like none of this stuff's being monitored.
Okay, so our first impression when walking into this organization is that we see a bunch of fraud risks right off the bat. See what I did there, Jen? It was a bat reference.
Oh, Jackie, that was a good one.
Okay, Jen, where are we going to start?
All right, I don't know about you, but I'm always going straight to the cash. So here we have a box of cash, which I'm going to assume represents the cash drawer or the register for the front desk in the gift shop. And we also have a donation jar. And if I had to choose, I'm thinking that donation jar could be a quick win.
I'm with you, Jen.
All right, so let's go check it out. So that donation jar is just sitting there at the front desk on the counter, unattended, and there doesn't appear to be any cameras monitoring this area. Not to mention, it's one of those big jars with the lids that screw right off. I could probably reach my whole hand in there, grab a handful of cash, and no one would even notice. So I'd say that donation jar is ripe for skimming.
Ooh, that's a spooky word, Jen. What's skimming?
Skimming is theft of cash or other assets before it's been recorded in your accounting system. So someone is able to take it before it gets recorded. And for that reason, skimming is known as an off-book fraud. And it's often hard to detect since there's no audit trail.
But this doesn't seem like a lot of money. So why are we starting here?
I agree. I do think this is low dollar risk, though here it's highly likely to occur given that it's unsecured. And even though this one doesn't fit into our priority box of our risk matrix, mitigating this risk can be a really quick win to get us started.
Okay, I agree with that. I think they would need to determine whether they want to accept this risk or eliminate the risk. And that would mean removing the donation jar.
Yeah, so let's assume we want to keep the jar. I mean, hey, money is money, right? And every penny counts. So let's map out a quick fraud response plan to reduce fraud risk here. So using our simple 30, 60, 90-day framework, let's organize our responses to be clear and manageable. So I think we can quickly tackle this risk in the first 30 days. Simply don't leave the donation jar unattended. Pretty simple, right? I'd also suggest replacing that type of jar with something more secure, like a sealed, lockable box or container, something that you can't reach your little fingers in to access the money. And that, to me, is probably a quick online purchase.
I'd also suggest adding a camera over this front desk or gift shop area. It's always a best practice to have camera coverage monitoring areas where money is handled. I think this is feasible in the 60-day time frame since acquiring and installing tech typically takes a little bit longer.
And I'd explore alternative ways to solicit donations to reduce the collection of cash in that jar. So, for an example, you might want to train staff to encourage roundup donations at their checkout, or maybe replace the cash jar with a jar that has a QR code on it that directs visitors to a secure online donation page.
Okay, I feel pretty good about this. We've only been here a few minutes. We've already reduced some fraud risk. Where should we look next?
Well, as I mentioned before, I got my eye on that cash box. To me, that's a big risk, but I don't think it's going to be as easy to solve as that donation jar. So let's go take a closer look. It's clear that the front desk and gift shop are places where this organization collects cash. And when I say cash, I'm referring to all forms of receipts. So checks, credit card payments, even cash apps. We always want to be thinking about ways our organizations receive money and assets, and then how we can safeguard those monies and assets. Cash is always going to be a high risk area. So that cash box that represents the cash drawer, the register for the front desk and gift shop, since this is a historical society, I'm going to assume that they're charging admission to enter the building to see all the lovely historical Transylvanian things. And since there's a gift shop here, I'm going to assume they're collecting cash from the sales of their merchandise. Those Transylvanian skulls we saw, maybe some historical books, vampire squishmallows. I don't know. Give us a thumbs up if we have any squishmallow fans in the house. Appealing to lots of audiences here.
I haven't seen any cameras yet either. I'd have to say this appears to be a highly likely area for fraud, and the dollar impact, it could be high depending on volume. If the society relies on donations, there could be a risk here too. There seems to be a lot of opportunity for fraud at the front desk and gift shop. So I do think we should put that in our priority box of our matrix.
I agree. And all of these things are giving me the heebie-jeebies and make me think about internal frauds like asset misappropriation and cash receipt schemes like skimming and larceny.
Ooh, spooky. I heard you mention skimming before, but what's larceny?
Well, Jackie, larceny is the theft of cash or other assets that have already been recorded on your books. So skimming is when there's theft that occurs before it gets recorded, and larceny is after. So with larceny, there would be an audit trail because something's getting recorded somewhere in your books to try to balance things out. And those types of schemes could be easier and faster to detect.
Okay, let's go back to skimming. So what cash skimming risk should we be thinking about here?
So here, I'd be concerned about unrecorded or understated admissions and inventory sales. So when a cashier finally does show up at this front desk and gift shop to ring you up for that pair of vampire fangs, I'd be worried about that cashier having the opportunity to let a visitor in, collect a payment, but not ring it up in the system and instead pocket the cash. So that'd be an example of an unrecorded sale. I'd also be worried about the cashier being able to understate a sale. So for instance, a cashier could sell one of those fancy skull bottles at the gift shop, collect full price from the customer, and apply an unauthorized discount on the sale without your knowledge and pocket the difference. Or that cashier could ring you up for a lower quantity. So say they only ring you up for 5 skull bottles instead of 10, you pay for 10 and they pocket the difference.
Jen, you are paranoid.
Jackie, this is part of doing a fraud risk assessment. You have to think about all the different things that could go wrong.
All right, fair enough. I see your point. So what type of larceny risks should we be thinking about here?
So here, I'd be worried the cashier could simply open that cash drawer, remove some cash, or same thing with the inventory. And I'd worry about the cashier being able to process a fake refund. So they could record a return of one of those fancy skull bottles and pocket the cash. I mean, that'll throw off the inventory, but it might take some time before someone figures that out.
Jen, I'm starting to feel overwhelmed. What do we do about these things?
Well, we want to think about preventing these types of schemes. So we're going to want to improve our control environment by reducing opportunities. You're going to hear that a lot, reducing opportunities for skimming and larceny. And there's a lot to tackle here. So we don't want to get discouraged. Let's look for some quick wins. So in the first 30 days, let's start with things like surprise cash drawer counts to deter and detect fraud. So your cashiers won't know when it's coming, but they'll know it's coming. Never leave your cash handling areas unattended, so you want to fix that immediately. Separate key duties. You want at least 2 people to be present wherever money is handled. And I know staffing can be a challenge at nonprofits, so you could consider using volunteers or maybe change the layout to add more visibility to the area. This is an area where you really have to evaluate the cost of staffing an additional person with the cost of potential loss due to fraud. I'd also want to restrict cashiers' ability from modifying transactions. So supervisors should really be the only ones that can apply discounts, voids, refunds, any sort of adjustments. And I'm sure we've all experienced this being in a retail store where the person in front of us in line is returning something and they got to call their supervisor and then we have to wait and it's really annoying. Jackie, let me tell you, next time that happens, instead of being annoyed, think to yourself, wow, this store has really great anti-fraud controls, and I just recognized that.
Okay, fair enough. So I already suggested adding a camera over this area to help protect that unsecured donation jar. So I'll just repeat that recommendation here. And I think this is a feasible 60-day goal. Now, not every organization can afford full security like cameras, multiple staff, and supervisors. So think about what would work best for your organization. Maybe 1 staff camera plus a camera is enough. Even just having a camera can help. People may act more carefully if they think someone is watching. That's called the perception of detection. The goal is simple. Take small steps that move you in the right direction.
And I'd add, let's add some simple fraud checks. So adding some basic fraud detection steps is also helpful. So that might include reconciling the cash drawer at the end of each cashier's shift. And make sure that each cashier is using their own unique ID to track their transactions. Now, reconciliations aren't going to catch skimming because, again, skimming is not recorded, but they can catch larceny. So that's when, recorded cash doesn't match your actual cash or inventory. So even small steps like this can make a big difference.
And what about after that? What would you be focusing on in the 90-day time frame?
So 90 days, that's when I'm going to make sure my documentation is in order. So I'm going to make sure my policies and procedures are updated and documented. And then I'm going to do a review to make sure that all these updated new procedures are operating as we expected. So this isn't a one and done exercise. You do have to go back and make sure that the fraud response plan you put in place is still effective and evaluate if any new risks have popped up. So I've talked quite a bit about cash risks in this room. Jackie, what about you? What risks in this room would you be focusing on?
Well, I cannot take my eyes off those passwords on the sticky notes on the computer monitor for all to see.
Come on, Jackie. Nobody does that anymore. That seems really exaggerated, even for this webinar. Those can't be passwords. Maybe they're just notes. Like maybe that guy from Good Will Hunting works here and he's working on some math problems.
No, Jen, this actually does happen. I'm familiar with a CFO who was given a second monitor to boost productivity. Unfortunately, he wasn't very tech savvy and no one helped him set it up. So he found his own use for it. He turned the monitor into a bulletin board and he covered it with sticky notes that had all of his usernames and passwords on it so he wouldn't lose them. That's a really funny and alarming example of how a lack of awareness can lead to some pretty serious security risks.
That is horrifying.
It is. A similar risk would be employees sharing logins and passwords, and I see this happening all the time. Exposed passwords and shared credentials create significant fraud risks. For this historical society, that could mean a potential data breach with no accountability since there's no audit trail to identify the culprit.
And Jackie, data breaches are serious. That is not something you can just ignore. If personal data is exposed, you often have to notify those affected. So where is this going to go in our fraud risk matrix?
So I think it would be placed in the high impact, high likelihood area, especially if your organization handles sensitive data, and really most of us do. And this is because the impact of a breach can be really severe. It could cause legal issues, a loss of trust, and financial penalties. The likelihood may be increasing due to growing cyber threats.
So what should we do about it?
Again, we want to focus on reducing opportunities for this type of fraud to occur. In the first 30 days, we want to make sure that everyone has their own unique logins, and this is especially true when the computer is public facing at a front desk or a gift shop. I'd also definitely require the use of a password manager. And I think it would be critical to require the use of multi-factor authentication to add an extra layer of security beyond the passwords. If you're not familiar, multi-factor authentication is when you require text or email codes or the use of an authenticator app in addition to a password. Maybe you require a biometric recognition like face recognition to unlock your laptop or phone.
So that's a mouthful. This sounds like a great opportunity to provide staff with some cyber training as well. And that's definitely something I'd be planning for the first 60 days.
Agreed. Then after 90 days, I would make sure that the organization's cyber policies and procedures have been updated and include the new password policies. I may also require that employees change passwords every 90 days for added security. If the Historical Society of Transylvania does not already have cyber security insurance, I recommend that they speak with their insurance broker.
Those sound like great plans. So any other risks you see in this room that you want to focus on before we move along?
I don't think so. Oh, wait, there is one more. Let's talk about gift shop inventory. In nonprofits, inventory usually falls into two categories: external inventory, items for sale to the public, like in a gift shop, or internal inventory, so items used within the organization, such as historical collections like here, or props in the theater, or food at a food bank. Inventory shrink means you have less inventory, but not because it was sold or used appropriately. Shrink can happen for non-fraud reasons, but when it's due to theft, it's considered asset misappropriation, a type of fraud.
Jackie, I got to stop you here for a quick second, because what you just said reminds me of an episode of the show Arrested Development that I saw, where the kids are working in a banana stand and one of the kids is stealing money from the cash drawer. And so they know that the money in the drawer needs to match the number of bananas sold. So the kid that's stealing money mistakenly thinks she can balance things out by take a banana, take a buck, so that it looks like everything's matching. But the joke is really that she's making the problem worse. So when they realize they're going to get caught, when that banana stand reconciler gets to it, they try to cover it up by burning down the banana stand.
Okay, Jen, that's a little extreme that you would burn down the facility, but you're right, it is still fraud. What you described is a great example of inventory shrink due to theft. It sounds like you really embrace this fraud mindset, even while watching television. And that's exactly what happens when we start paying attention. We begin to spot these fraud risks everywhere, and that's the goal.
So what are we going to do about this fraud risk? How would you assess it?
If we think about our matrix, I'd say the fraud risk here is highly likely, given that our inventory was unattended and that there are no cameras monitoring the area. And the impact is also likely high, given that we must consider not only the inventory for sale, but also the collection items on display in our historical society. So let's talk about what to do about inventory risk and how do we prevent and detect it. So for inventory, like our gift shop, in the first 30 days, you want to be thinking about prevention, reducing opportunity. So let's start with thinking about how the gift shop is laid out. Are there any blind spots? I'd also focus on implementing some surprise inventory counts. For inventories like museum collections or food banks, you also want to make sure that your physical security is top-notch. Are you locking up areas and restricting who has access? For the first 60 days, we've already talked about the perception of detection that camera coverage can provide. So that would be a good start. I would also be focusing on reconciling inventories to make sure that they match your accounting records.
So Jackie, we hear phrases like reconcile, make things match. Tell us what you really mean here. What are you going to be doing or looking for?
Absolutely. So obviously, annual inventories are a good idea. Cycle counts are important. They involve regularly checking parts of your inventory to catch issues early. So for example, in our gift shop, you might cycle count small, high theft items like keychains. Cycle counts also help inventory remain accurate and secure. And when we talk about collections, they aren't just in big museums. Smaller museums and historical societies also have valuable items, and they can be targets for theft. For example, 2 years ago, I sat through a fascinating presentation about law enforcement that spent 14 years tracking down 36 historic guns, some from as far back as the American Revolution, that were stolen from small museums over 50 years ago. Some museums didn't report the thefts out of embarrassment. Others didn't even know the items were missing because they had no inventory records. Lesson: always document your inventory. It helps protect your collection and makes it easier to respond if something goes missing.
Wow, that is a really interesting story. Wait, Jackie, did you just hear something?
What?
I think there's someone else here.
Oh, I hear it now too. I think there's people out there in the audience commenting in the Q&A about fraud risks they're also seeing in this room. Let's go check it out. Jen, you check it out and I'm gonna chatter, okay?
What a surprise.
I know. If you think about the weaknesses we just discussed, does this remind you of something that would need reviewing at your organization? What other weaknesses could be considered for a front desk, gift shop, or lobby area?
And I also want to just add, every organization's different. I'm going to chatter too. And you have to apply what we're doing here to your organization. So you might not have a gift shop. Maybe you have a concession stand where you accept payments. So the same process applies. So tell us, what is it that you worry about? I'll just say, looking quickly here in the chat, I see a comment about, an alternative to changing password every 90 days is recommending using a multi-word or phrase password with spaces and punctuation. So that is a really good tip as well. You see that a lot where you use something as a sentence and kind of mix letters up with numbers or symbols. That is a great way to protect your passwords. I'm also seeing, some questions about if you're using biometric recognition on the phone or laptop, someone quits or gets fired, the company can't access it. So what would mitigation suggestions be there? And I would suggest make sure you have a good IT person on hand for that kind of stuff. At least if you can get the computer back, no one else can access it. So I think there's a lot of great, comments in the chat. I think we'll, save some of these to the end and answer some more questions. These are all great risks and tips to consider.
Right, and so we've got a lot more haunted house to cover.
Yeah, so let's head further inside and check out more of this historical society. We've barely gotten in before getting straight to work. So Jackie, where do you want to go next?
I would like to go to the very thrilling Accounting and Human Resources office.
Ooh.
But Jen, I think there's like a mist creeping out from under the door. Do you think there could be a vampire in there?
Jackie, don't be such a scaredy cat. I mean, what's the worst that can happen? We're on Zoom here.
Well, Jen, we could become the undead.
Jackie, we're accountants. We have faced far worse.
Fine, but I think I'm going to close my eyes as I open the door, just in case.
Well, if you close your eyes, you are definitely going to miss all the potential fraud in this office. My word, take a look around. This is outrageous.
All right, I'm just going to open one eye, and I see a bank statement just sitting out there in plain view on the desk. I see some invoices marked urgent on top of so much paperwork. I don't even know where to start. And oh my, Jen.
What is it? What is it?
I can barely even say it.
Is it the undead?
Worse, unsecured blank check stock, and they're sitting on the shelf for all to see.
No, who even uses physical checks anymore to pay bills? Are you sure it's not part of the collection on display here in this historical society?
Oh, Jen, with all of these options, where should we start? Any quick wins here? What's a likely fraud risk that could have a high impact? Anything?
Yeah, I mean, I mentioned before how I feel about cash. Cash is inherently high risk. So if you're still using manual checks and leaving them laying around, that's like leaving that box of cash out. You're exposing yourself unnecessarily to fraud. You're essentially handing out your bank account and routing number right there. And surprisingly, many organizations do still rely on manual checks, which opens the door to fraud risks like unauthorized disbursements and check washing. And I heard about a scheme recently that involved check washing, which is where stolen checks are altered. So a growing trend is that fraudsters are now changing only the payee name and they're leaving the dollar amount alone. So think about it, Jackie. If you mailed a check and you saw the correct amount clear your bank, would you suspect anything's wrong?
Nope.
I mean, you're not looking at canceled checks and seeing who actually cashed it, are you?
Nope.
You'd likely only find out this was a problem if the intended recipient calls you up and says, "Where's my payment?" But would you notice if that same check cleared your bank for a different amount?
Yeah, I would definitely notice that.
Right. So leaving the dollar amount alone and just changing the payee is buying the fraudster more time to get away with it, which allows the fraud to go undetected for a longer period of time.
So let me guess, the solution is to move to an electronic bill pay service.
Yes, Jackie, you're correct. You win a prize from the gift shop. We are always going to recommend moving away from physical checks and instead adopting technology that can add a lot more security and controls. So electronic bill pay is safer than using manual checks, but Jackie, it's not risk-free. We both know from experience, you have to be really careful when selecting vendors for payment. Fraudsters are creating fake vendor accounts that look almost identical to real ones, but they include a slight name change. So maybe instead of society, it's societies. So same or similar name, and then they use a different address. So if you're not careful, your payments can go to a fraudulent vendor. This kind of fraud can come from inside or outside the organization. So bottom line, always be alert for unauthorized payment schemes, whether you're using checks or electronic platforms. And just because you use an electronic bill pay system, you could suffer from check washing because your payment may still be mailed, but it's being mailed by the electronic bill pay provider rather than you. So that check, maybe it has a check washing scheme, but it's still safer. And Jackie, do you know why that is?
I do know why, because this payment does not include your organization's bank routing number and account number like your own checks do. Instead, the payment includes the payment information of the service provider. So you are, in essence, transferring the risk to them.
You are so good at this, Jackie. You are correct. So let me ask you another question. How would we assess this risk using our matrix?
Well, Jen, I consider these risks to be highly likely here and high dollar impact, considering they're just storing these blank checks out on an open shelf. So I want to focus on responding to these risks first.
Right again. So let's look at our fraud response plan.
So the quick 30-day wins would be moving to an electronic bill pay service and making sure to always ask vendors for their PNI, or payment network ID, or the equivalent, prior to connecting. That way you can verify that you're paying the right vendor. You also want to secure the existing blank check stock by locking it in a drawer or safe to restrict access.
Yeah, and then within 60 days, I'd add using Positive Pay. So I'd want to start it sooner than 60 days, but I'm going to leave it here because it probably requires paperwork and approvals. So I'd also want to make sure that you're implementing regular reviews and reconciliation of bank activity compared to the accounting records. And that should include review of payees and amounts for checks clearing your account. And as a reminder, you want to go back and do a review to make sure the updated procedures are operating as expected and evaluate if any new risks popped up. So Jackie, where are we off to next?
I think we should address these bank statements that are visible on the desk for anyone in the office to see. That would be a really big risk for me. Unsecured financial data could lead to a breach. Bank statements should not be printed and left out. When the statements are not in use, they should be secured in a locked drawer or a safe, and they should be shredded when no longer needed. Bank statements can be accessed online really easily, and that would limit access. And I know you're going to ask me, Jen, so I'm just going to say it. This, for me, would be highly likely, high dollar impact fraud risk that needs to be addressed ASAP.
I was going to ask you that, and I'll just add that I believe that there are still banks out there that actually still display the full account number on their statements. So again, this is not information you want to leave out for just anyone to see. So let's take a look at our fraud response plan for this one. So all those things you just mentioned, improving physical security, moving to online access, that can all be tackled in the first 30 days to reduce this risk. Then within 60 days, we'd want to ensure that monthly review and reconciliation of the bank statements to the accounting records is happening.
So, reviewing bank statements is really key to spotting fraud, especially in small organizations where one person might handle everything: paying bills, depositing checks, recording transactions, and reconciling the account. Even if duties aren't fully separated, a careful review of the bank statement can help catch red flags. So, download those statements directly from the bank. Do not rely on forwarded copies. And watch for checks from unusual number sequences, duplicate check numbers, transfers to unknown accounts, duplicate ACH payments, unexpected wire transfers, and multiple payments just under approval limits. These could be signs of fraud or errors worth investigating.
And I hope this is obvious, but we should be doing online bank reviews daily. Remember, the cost of fraud adds up the longer it goes undetected. So having eyes on your activity daily will help catch discrepancies quickly. And if you're not doing that daily already, put that on your 30-day bucket list.
In that 90-day time frame, I'd also take a look at the reconciliations and see if there are any stale checks. If there are, every state has their own unclaimed property rules. Check with your state to see what needs to be done and when. I'm aware of a situation where a controller voided a $2,000 check in the accounting system in 2018, but did not void the check with the bank. Lo and behold, this check showed up again in 2025 and was cashed by the bank. This was an unexpected $2,000 hit. The bank declined to claw back the funds as the check had never been voided with the bank. Interestingly enough, this actually was a fraud. The nonprofit that the check was originally made out to had closed. When the building was renovated that they had rented offices in, someone found the check and cashed it.
Wow. All right, Jackie, I feel like we're on a roll. Where to next?
Let's take a look at those invoices marked urgent. If we were to take a closer look at these, I wonder if we would find some fictitious vendors.
Ooh, fictitious vendors. Tell us more.
If I had to have a favorite type of vendor, and a vendor fraud, and who doesn't have a favorite, it would be fictitious vendor fraud. In this fraud scheme, invoices that appear to be legitimate are submitted for payment. However, the vendor doesn't exist. The invisible vendor. This totally belongs in our spooky historical society.
Right. They leave no audit trail and no one can see them. The person submitting and authorizing the invoice has fabricated the vendor. And this vendor is typically one that provides services, not products. It's hard to get approval for plastic vampire fangs when you have no vampire fangs to show for it.
Very
Services rendered, though, that's a bit easier to sneak through, much harder to verify. Who has time for that? In fact, Jackie, while we were preparing for today, we realized that we share 3 real-life examples where organizations were defrauded by external parties through business email compromise schemes. And in each case, the vendor's email was hacked. So not even the organization, their vendor was hacked. And the organization received a fake invoice that looked real. And it had an urgent request for payment of architect services of all things. These fraudsters were very clever. They mimicked the real vendors and they requested payments for amounts similar to previous legitimate services, making the invoices seem very believable. And as a result, these organizations paid without suspicion. And in one case, the fraud was only discovered when someone from the organization bumped into the architect at an event randomly, and they casually mentioned the payment. And the architect had no idea what they were talking about. Like, wild, right?
That's completely crazy. Jen, speaking of business email compromise, I recently reviewed IBM's 2025 cost of a data breach report and found this interesting statistic. The time needed to create a convincing phishing email went from 16 hours without artificial intelligence to only 5 minutes with AI. Now, how scary is that?
Now, that is a very frightening stat, Jackie. All right, back to business. How would you assess these risks using our matrix?
I feel like you're trying to trick me here, since anytime I see the word urgent, my radar is up. But I feel like these could be high dollar impact, but the likelihood would be fairly low.
So what would our fraud response plan look like?
The first thing I'd recommend is slow down. Do not bypass your internal controls for urgent requests. Do your due diligence and don't rush to accommodate in your haste. There are rarely accounting emergencies. In the first 30 days, focus on separating key duties to reduce fraud risk. Consider using electronic bill pay if not already in place. These systems help divide responsibilities where one person sets up a vendor, another enters payment info, someone else approves the invoice, and a different person approves the payment. Also, make sure all paper invoices are clearly marked as paid to avoid duplicate payments.
Right. And you also want to make sure the right person is reviewing these invoices. So the person that's reviewing should really be familiar with what was ordered or what service was provided.
In the first 60 days, focus on tracking vendors more effectively. Always ask for a Form W-9 and make sure it includes the full vendor name, the employer identification number, and the address. Use your accounting software to store vendor details like phone numbers, contact names, and email addresses for quick reference. Review your W-9 files to assure you have one for every active vendor. If possible, digitize the file so you can sort and review it alphabetically. It makes the process easier. Also, periodically scan your active vendor list for anything unusual or unfamiliar.
And after that, I'd be going back to making sure my policies and procedures are updated.
Okay.
All right.
So let's move on to perfect attendance. Jen, why don't you take this one?
Yeah, this one's kind of interesting. So we see a certificate on the wall for the CFO's perfect attendance.
So why would that be a fraud risk?
Well, perfect attendance can be a red flag because if someone never takes time off, while it might seem like dedication, I would look at that as, someone might not want others seeing their work, possibly to conceal fraud. So as an example, in the fraud case, All the Queen's Horses, the government employee who was defrauding the government, they actually did take vacations, but she made sure that no one handled her mail while she was gone. And why was that, you may ask me, Jackie? Well, the mail included bank statements for a secret account she had been using to steal money. So whether someone never takes time off or if they control the work while they're away, the risk is the same. They can commit and conceal fraud.
And it's not always going to smack you in the face like the perfect attendance certificate hanging on the wall, but it's something worth considering. So in the case at our historical society, the fraud risk is highly likely and high impact because we're in the CFO's office. So it should be prioritized in our fraud risk matrix.
So here are the quick wins. Separate key duties. It's like a broken record. You want to make sure that no one has too much access, and you don't want anyone to be able to cover their tracks. You might want to consider implementing mandatory vacation or job rotation policies for employees in sensitive financial roles. But we do get this can certainly be challenging for small nonprofits.
And then finally, I would make sure that your vacation policies are updated and that you have goals for rotating key financial tasks. Oh my gosh. Jen, I have been looking in the chat and there's tons and tons of great stuff in here that maybe we can wait till the end to walk through, but there have been some great comments in here.
Yeah, just one real quick, I would say someone had asked, who should be performing a fraud risk assessment and, who should require it? I think that's a good question. We've talked about every person in the organization needs to be thinking about how the organization is vulnerable. So I would say the answer is everyone. Who should be leading it? That's probably going to be, someone in your leadership team. If you have the luxury of having a risk management person or an employee like that, but you'd want your board involved, your ED involved, your CFO involved, but really everyone has a role in fraud prevention and detection at the organization. All right, so that office had a lot of issues. Let's get out of here. There can't be that much more, right?
Well, Jen, we haven't even entered the executive director's office.
Wait, what dastardly deeds could await us in this office? Jackie, did you hear that? I think I hear a wolf. Maybe it's a werewolf.
Wrong movie, Jen. This is Dracula territory. Get back on task, girl.
Okay. Deep breaths. I'm seeing a donor check laying there. And get Jackie. Is that a credit card? Completely unsecured or worse? Oh my ghouls. Is that a debit card? This is a financial horror show.
Jen, what is it? What's worse than what is worse than what you've already found?
Jackie, everything is late. It's so late.
What's late?
The audit, the 990, the monthly financials, they're all just haunting us from the past.
Oh my gosh, this is so much more terrifying than we could ever have imagined. Where do we begin to banish these financial phantoms?
Oh, Jackie, you know my answer already. I'm going straight to the money, right? I'm going right to that desk and I'm picking up that donor check and I'm going to get to the bottom of this.
Jen, why does this upset you so much?
Jackie, I gotta say, there's so many things that can go wrong here. So, based on the poor attendance we've seen so far at this historical society, this organization clearly relies on donor support. So, safeguarding donor information and donor funds, that really has got to be paramount. My mind is racing with fraud risks and questions like, how did this check get here? Did the ED open the mail by herself in her office with no one around? Did the ED pick up this check at a donor lunch, bring it back to the office? Was the check, why is it sitting there on the desk? Was it even remote deposited yet? Does this organization not need money so bad they can just leave undeposited checks lying around? And Jackie, if it was already deposited, why hasn't it been shredded? Someone could just take it. That would be skimming or larcening if we ever get an answer about whether or not it's been recorded. And Jackie, what if the donor stopped by to say hi to the ED when they're in here touring the Vampires and Fangs display? What would that donor think about their personal information just laying around on someone's desk, visible for anyone to see? Could you imagine the damage that could be caused if someone were to steal donors' PII, personally identifiable information? And what if that envelope included a copy of a grant or bequest form that the organization had to fill out in order to receive their payment?
All right, Jen, you need to slow down and take a breath. You are clearly in fraud risk overload here, or maybe you just had too much sugar from your stash of Halloween candy.
I'm sorry, I know there's just so much. And I feel like these fraud risks are just making my head spin like that girl from Poltergeist. I mean, are you seeing this too?
Oh, Jen, wrong movie. Again, that was The Exorcist where the girl's head is spinning around. But to answer your question, you can bet your sweet pumpkin that I'm seeing this too. The fraud risk in this office is frighteningly high, like something out of a haunted ledger. Ghostly whispers echo through the halls and shadowy figures seem to move the numbers when no one's looking. It's a financial fright fest. Was that too much, Jen?
Oh, that was way too much, Jackie.
Sure. Okay. Okay, so when you mentioned the skimming risk here, I thought to myself, well, what could someone do with a check addressed to an organization? How could they really steal it? And then I thought to myself, this reminds me of an interesting story from a book you recommended to me in our fraud book club last month. We read a story about skimming. And even though this particular fraud happened about 30 years ago, I know this type of fraud still happens today. So gather up. Here's the tale from long ago. An office manager at an organization with the initials NLBMDA, that was hard, stole $110,000 by opening a fake bank account with a name that had the same initials as her employer. So when checks came into her employer made out to NLBMDA, she could deposit them into her own account without raising suspicion. The fraud was only discovered when a donor noticed that they hadn't been thanked in the organization's magazine. A review of the donor's canceled check revealed the theft. This is really similar to the All the Queen's Horses fraud you mentioned. In that story, the fraudster had also created a bank account with a name like her organization and used it to perpetuate her fraud. So I guess everything old is new again?
You know, that story, Jack, is actually pretty similar to the fake vendor scam that we talked about earlier, except, here it's on the cash receipt side. There it was on disbursements where they, fake vendors were using similar looking names. So I think the lesson there is we really have to watch out for lookalike names. And, we're talking about this here in the ED's office, but fraud risks like this could show up in places like the front desk where mail is received, or in the accounting office where checks are deposited. And those spots maybe seem more obvious, but we need to think about all the different ways that money moves in and out of our organization. So since the executive director is often involved in fundraising, it's also important to consider how they handle funds.
Jen, I also think you made an interesting point during your rant. Nonprofits often complete forms to receive payments like grants or bequest awards. And these forms ask how they or ACH. If they choose ACH, they must provide sensitive banking details like routing and account numbers. So it's crucial that staff understands not to send this information through email or unsecured email or through the mail, as it poses a security risk.
See, I told you there's a lot to think about in here. So, what are we going to do to respond to all these risks?
Well, Jen, I think a lot of these risks can be addressed rather quickly in the first 30 days just by enhancing physical security, such as timely depositing checks received and then shredding the physical check copy as a secure destruction method. I'd also recommend requiring all mail and cash receipts be opened and logged in the presence of two people. And this doesn't need to be a burden. This dynamic duo only needs to work together for as long as it takes to open the mail and create the initial cash receipts listing.
And for smaller organizations where separating duties is tough, I think a lockbox could help. So with this setup, your checks are getting directed to a secure bank managed PO box. And then the bank deposits the payments and they send you a record of the activity. So of course there's fees involved here if you choose this service, but it might be worth it compared to hiring extra staff. So a lockbox is going to prevent your staff from being able to directly handle incoming checks, which will reduce your fraud risk. So I would put this in the 60-day bucket because, again, I'm sure there's paperwork and approvals required for putting this kind of control into place.
And I'll add that periodically sending out donor activity statements can be helpful for donors who have pledges, but also especially for those who give on a recurring basis, as they may note if a donation is missing. As I mentioned before in my NLB-MDA example, publishing an annual donor list is a great way to recognize donors, but also let staff know that this information will be made public. I do know that my State Society of CPAs does this annually, and I do look for my name.
NLB-MDA. Okay, Jackie, I think the next bullet in our 90-day plan might be a little too scary to implement. It might feel like a big step to limit the type of payments that we accept. Like, could a nonprofit really stop accepting checks like some retailers have? Like, could you tell your donors we don't accept a check? I mean, nonprofits want to be able to accept money in any form, right? So it feels risky to restrict options. Now, I know if we get more credit card donations, which donors love to earn those rewards, we do often on the nonprofit side think about the cost of the credit card processing fees, or the fact that we then may have a delay in receiving our funds because those credit card processors hold the funds longer. But, you know, there are ways to enable donors to help cover the cost of those fees. Ultimately, it's going to be about weighing the cost of those fees against the benefit of reducing fraud risk. So if your organization does take that leap and decide to stop accepting checks or even cash, it should update its gift acceptance policy to reflect that change. All right, Jackie, what other fraud risks are you seeing in this office?
That darn credit card, or worse, is it a debit card? Those are definitely high risk, highly likely, and high dollar impact.
So can I just say I hate the use of credit and debit cards? They just carry so much risk and they're sometimes necessary. But how many fraud cases do we hear about that involve the misuse of company cards? I mean, cards allow you to bypass your normal accounts payable purchasing controls, like the processes you go through for vendor approval, getting W-9s, maybe a purchase order, getting invoice approvals, maybe needing dual signatures. All of that has to occur before the organization spends any money or sends any money out the door. With a credit card, though, they can bypass all of that and just spend the organization's money. So I really think the use of credit cards should be limited.
I couldn't agree more, Jen. And I have to say, it makes me nervous when I see a credit card just sitting there for anyone to use. And I bet that sometimes it isn't just the executive director using this card. We want to make sure that everyone that needs a card has their own card. Otherwise, there's no accountability and no audit trail that clearly identifies who made a purchase. However, this doesn't mean that we just issue credit cards willy-nilly. We need to be thoughtful in who has access to and who really needs credit cards.
So what do you recommend we do to reduce these risks?
I think there are several quick wins here. Stop using debit cards. That's it. Cancel them, cut them up. These are such high risk. They pull money straight from your bank account. If fraud occurs, at least with a credit card, you hold on to your money while you dispute the charge. We also want to make sure that we disallow cash advances. We don't want to find out weeks later when we receive our statement that someone has withdrawn $1,000 in cash. Block that up front. And I think a policy and procedure that folks sign off on when they receive their credit card is a must. I'd also add that with credit card purchases, there needs to be adherence to purchase thresholds. If the policy is dual signatures at $5,000, there can be no breaking up purchase into two $2,500 purchases. I just encountered this happening recently.
And Jackie, we have to require receipts, and receipts have to be turned in a timely manner. There is no reason for receipts to be late. Moving into that 60-day bucket, I'd say we need to start changing over to an electronic workflow. So there's great technology out there that can really simplify reporting and enhance your approval controls. We should not still be using Excel spreadsheets manually to log our credit card activity for coding, to then enter it into our accounting system. So find a tool that has an app where cardholders can scan their receipts at the time of purchase, code them, and submit them for approval. This will make life so much easier, and it actually helps with fraud detection as well, because you'll have real-time visibility into your activity and you may be able to notice anything unusual. You can also call your credit card company and ask them to block certain merchant category codes in the 60-day bucket. These codes identify MCC codes, right? That's what they're called. So they identify businesses, and blocking them, you can prevent your cardholders from being able to make purchases at high risk or inappropriate places. And you might even be able to customize this for each cardholder. And Jackie, a key control that is often overlooked here is training the people who review and approve credit card transactions. So just having an approval process isn't enough security. Reviewers really need to know what to look for. They're often reviewing multiple accounts with lots of activity, and there's a quick expected turnaround because the bills due. So it's really easy to fall into a rubber stamp mentality. So you really have to train your reviewers, tell them what to look for, right? They want to look to make sure that the cardholder is complying with the organization's card policies. Like you mentioned, splitting that transaction into two to avoid extra approvals. Check that all receipts were provided and that they were itemized receipts, right? So from a restaurant, we want that receipt that tells us what was actually ordered, not just the one that shows the total paid. You also want to review dates and times of purchases to make sure they make sense. So with someone using their card on the weekend or after hours, those should be, looked into. So that's sort of like confirming the business purpose of those transactions, particularly for charges that can appear personal, like an Uber or certain, subscriptions. You want to confirm that that's really business related. And finally, you want to look for unusual purchases, things like gift cards and travel. And we could go on and on and on.
So, and I think this last one goes without saying, but someone needs to be reviewing and improving the ED's credit card activity and statements, and that someone should be a board member. It's a best practice for strong governance and supports an ethical culture, starting with leadership at the top. The review should happen regularly, ideally every month, and this doesn't have to take a ton of time. So you board members out there, don't worry, it's manageable, and you'd be amazed at how much you can learn about the organization through this process.
All right, Jackie, where are we off to next?
Well, let's go check out what's late. It looks like the financials are late again, and this is always a red flag. And I've got to tell you, lack of urgency around financial statements is a problem. It makes it seem like the organization doesn't care or they don't know how to get the job done. And if this extends to the ED and the board, well, then we have a tone at the top problem.
What do you mean by tone at the top?
So what that means is the organization's general ethical climate, and specifically refers to the actions, behaviors, and attitudes of management and the board.
Got it. Okay. So organizations should want their info timely. And if you're not seeing it until weeks or months later, how are you making decisions? How would you notice if funny business is happening?
Right. Late financials could be a sign of weak internal controls or staff that isn't trained properly. Or worse, they might know that no one's reviewing the reports and use that as an opportunity to commit and conceal fraud. Reviewing financial statements regularly is a best practice and also good governance. They show staff that you're paying attention, which helps prevent fraud and helps you catch problems sooner. The faster you review them, the quicker you may notice irregularities and problems.
The same goes for bank recs. If your financials are late, what are the odds your bank recs are being done timely? So it's important to set your deadlines for a month-end close and stick to them. So let's take a look at our fraud response plan here. And I think we've already mentioned these, Jackie. You want to set deadlines. If you haven't already, begin reviewing financials with the board, and at 90 days, start looking at variances.
You got it, Jen. This one's actually pretty straightforward.
All right, where do we go next?
Let's check out that spooky looking audit in 990. I have a bad feeling that if this historical society is producing late financials, then their audits in 990s are impacted too. Timely completion of audits in 990s is critical. Delays are always a red flag for me.
I couldn't agree more. And I'm sure others would say that same thing, like your lenders and donors, right? So if you actually have to file your 990 before your audit's complete just to meet your filing deadline, that's going to be a glaring red flag. And you might also have to amend your 990 once that audit does get complete, which is definitely a red flag. Non-compliance can have serious consequences. So late filings of your 990 can subject you to penalties and fines. And a lot of people don't know this, but if you don't file your 990 for 3 years in a row with the IRS, you may lose your tax exempt status. Late filings can also impact your ability to get cash. So your lenders may refuse to renew lines of credit or approve loans, and that can be devastating if you're relying on short-term financing while you're waiting for your federal funds to come in. And your donors may lose confidence. They might fear poor oversight, lack of sustainability that could lead to loss of grants, future contributions.
All right, Jen, what are we going to do about this?
Again, I think this one's simple, right? You just have to prioritize it. Make sure things get filed on time. That's critical for effective governance and that strong ethical culture we talked about earlier today. And we have to remind our board members that they have fiduciary responsibilities. They are held to legal and ethical standards. Being on a board is a serious commitment. And one of the fiduciary duties is one of obedience. And that's really the one that covers making sure that the organization complies with laws and regulations, like filing your 990 on time and making sure your audit's completed.
Jen, it's a good idea for the organization to have board members review the audit and Form 990 before they're finalized. This isn't meant to be intimidating or burdensome. It's actually a standard best practice for nonprofits, and it has to be disclosed on the Form 990 anyway. It's a good idea for the organization to post recent audits and Form 990s on its website. Being transparent builds public trust. Since the 990 is a public document, funders can already find it on sites like GuideStar. So don't hide it. Share it openly.
And we should mention, you should be aware there are 2 versions of your 990. So a full version goes to the IRS, and that's going to include a Schedule B, which lists and identifies your major donors. The public version, that's what you want to post online and share with your funders. That would not include your donor names. So if you're sharing the public version, if you're sharing the full version, the complete version publicly, that's going to be a red flag. That may suggest that you don't understand the disclosure rules or that you don't value your donor privacy, which might hurt your funding. So on that note, let's take a quick look at our Q&A. Let's see what everyone else came up with.
Jen, there was a question about what apps for credit cards for, making that workflow easier. And I know there's a couple that you mentioned when we were talking yesterday.
I think, not that we're endorsing any, but, Bill Spend and Expense, Ramp, I've seen Expensify. There's a lot of good ones out there that you can, evaluate what's the best for your organization. And another one I saw, Jack, I'll just point out, for electronic payments, how would you handle 2 signature policies on checks? A lot of these bill pay platforms allow you to set in the settings authorization. So if your policies, you need 2 signatures over a $10,000 invoice, you can build in those rules so that maybe a board member gets notified and they have to approve it before the bill can actually get paid. So there's a lot of really cool internal controls in these electronic platforms that you can look into. All right.
Thanks,
well, I think the hard work here is done, Jackie. I think we can go put our feet up, eat some chocolate.
Okay, not so fast, Jen. There's one more spot we need to investigate.
It's not the basement. Please don't say it's the basement. I'm out. I'm not going down there first.
All right. So no, not the basement. We'll save that haunted horror for next year. It's the employee break room, and there might be chocolate.
All right, you go in first then. You look for chocolate, and then I'll consider joining you.
All right. So, okay, I'm going to take a deep breath, open the door. I'm going to peek in.
Is there chocolate? Don't leave me in suspense.
Okay, Jen, I think you can come in. There's nothing really scary here.
Great.
Unless you think a hidden time clock, unsecured sensitive information, and a whistleblower hotline are all rainbows and unicorns.
Jackie, I thought you said nothing scary. You tricked me.
Come on, Jen. It's just a little spooky fun.
All right. That's a relief. Honestly, I could go for a Twix bar right now. So what was that scary ghost noise? Was that you?
Yes. it was
Yeah,
me. I'm
you're
a
a
ghost
ghost?
employee. I am. If you're not aware, ghost employees are employees who don't exist.
Like our missing employee at the front desk.
Exactly. Ghost employees can happen when one person has too much control over the payroll system, like adding new employees or keeping former ones active or changing addresses and bank details.
Spooky. So, Jackie, how about buddy punching? Could that be a risk here?
Don't know that one.
That's when, I'd ask you to punch in for me because I'm running late. Or, if I leave early, I'm going to ask you to clock out for me at my normal time.
I love you, Jen, but not enough to commit fraud. Story time. So when a group home in southeastern PA expanded to multiple campuses, some managers took advantage of weak oversight. They faked overtime for their employees and split that pay with them. The fraud was discovered when this overtime spiked at certain locations. And in total, 41 employees were accused of stealing nearly $1 million over 21 months.
Zoinks. That's a lot of Twix bars. And with a time clock in an out-of-way area, I would guess the opportunity to clock in or out for someone might be high.
Right? This is going to be a high likelihood and a high dollar fraud risk. So let's talk about some anti-fraud opportunities.
So you want to make sure your time clock's in a visible position, like a busy hallway.
Right. And well, it's not always easy to move a time clock, so maybe have some camera coverage here too. I'd also recommend you use a payroll provider that allows your employees to make address and banking changes on their own. And for hourly employees, make sure a supervisor is signing off on time clock reports. I'd also familiarize myself with payroll reports, and I'd explore any trends that I'm seeing. Is there any unexpected overtime? And is there a trend you can't explain? Do you know everyone on the payroll? Jen, do you have any additional thoughts?
Yeah, I think, making sure we have authorization in writing of salaries and wage rates determined by designated members of management. Salary changes should always be reviewed and approved by the board, whether as part of the annual budget or in the annual review of the executive director. And going back to bank recs, we need to be, doing timely recs of the payroll bank account as well. And that should be done by someone who's not involved in preparing and approving payroll. And if we're still handing out paper payroll checks, that person should not be involved in the rec either.
And if we don't have policies and procedures for timekeeping and payroll, we need to add that to our list. Okay, Jen, what's next?
Jackie, it looks like there's some boxes in here in this room with payroll records and financial documents. They're not even taped shut. And even worse, there's stacks of paper, so much paper.
Jinkies, we do really have some work to do here. So I'm seeing like award letters, old audits, bank and credit card statements, and payroll reports from 1995. Jen, the old payroll reports have social security numbers on them.
Holy PII, Batman. And Jackie, you've got incredible eyesight to be able to see all of that. But shouldn't those payroll files have been destroyed by now?
Jen, we're going to have to hocus pocus these files out of here. So if we want to minimize the specter of a data breach, we need to secure our sensitive data, whether that's investing in locking file cabinets, offsite storage, or securing the data in a locked office. Many years ago, I worked for an organization where we boxed up our monthly paperwork, sealed the box, signed and dated over the seal. And if we needed to reopen it, we would have to reseal and re-sign. This is low tech, but effective.
Also, consider digitizing your documents. If you have a lot of paper now, let's make it a priority to shift to a more paperless workflow. We can keep a lot of data in a much smaller space. But when you do digitize, make sure you also have a plan to discard your digital data.
Finally, if you don't have a document and data retention and destruction policy, make sure you get one. So Jen, where are we heading to next?
Let's head to this whistleblower. This looks like a whistleblower hotline, right?
Yeah, that's what it looks like. That's great news. Our historical society has a whistleblower hotline.
Finally, we can use some good news right about now. My energy's fading faster than a vampire at sunrise.
Well, and according to the ACFE, the top way fraud gets caught is through employee tips. But wait, maybe we celebrated too soon.
What now?
Well, I think one of the pull tabs is missing. Do you think someone suspects fraud? I mean, it wasn't me. I know I went into the room first, but something tells me that we're not alone, Jen. So I have to say, it's great that the Historical Society has a whistleblower hotline, but we want to consider who has access to the hotline. Should it be just employees and just in the break room? Or should we include board members, volunteers, and vendors? We also need a plan for how to respond to reports and who receives that report. Would it matter if the report were about a board member or management? So these are things we want to consider when implementing a hotline. We want to make sure that all the potential whistleblowers trust that reports or suspicious activity will be promptly and thoroughly reviewed.
And we should also educate employees on how to forward tips that get directly shared with them. Channels could be a third-party hotline, a dedicated email inbox, maybe a web-based form. Open door policies and anonymous surveys can also support early fraud detection. Let's take a quick look in our Q&A, see what else you all have come up with.
There's lots of good. Go ahead, Jen.
I was going to say the one stood out to me, someone recommended outsourcing IT to get more expertise. I think that's a really great tip.
I do too. That's great. All right.
All right. Well, we made it out of the Haunted Historical Society alive.
With 5 minutes to spare, Jen. Look around. No more spooky cobwebs, no creaky floorboards, and those broken shutters have vanished. And Jen, I think the sun is fully out. Wait, is that a rainbow over the graveyard?
It's like the curse has been lifted. We did our fraud risk assessment, and now the Haunted Historical Society isn't so scary anymore. Turns out the real monster was poor internal controls.
Zoinks. All right, let's wrap up quickly.
All right. We want to prioritize our quick wins, focus on likely high impact risks, use a simple matrix to help you focus where it matters most, and organize your response plan into 30, 60, 90-day increments. Make sure you're focusing on dual controls, limiting access, strengthening oversight, and verifying your funds and your assets through reviews and reconciliations.
And here are some of the goals we have in place for our Historical Society of Transylvania based on our assessment. And I know this is a really busy time of year for nonprofits. For some of you, it's year end. We have Giving Tuesday coming up. Some of you are working on 2026 budgets, and some of you may be in audit season and closing out the first quarter of your fiscal year. But please, please, please make some time for a fraud risk assessment so that we can help keep the nonprofit sector strong. Also, we have some resources on our last slide here if you'd like to learn more about the topics we covered today. And honestly, Jen, we have 4 minutes left. If anybody is going to hang around for those last 4 minutes, I'd appreciate it because we'll take a look at some of the questions and comments here in the chat. Jen, anything that you want to start with right off the bat?
I see a question, has the webinar started? So yes, the webinar has started. Our slides being shown. Yes. Slides were being shown, and you will get a copy of them as well as a recording. I see someone put in a risk. How about someone just walking off with the whole donation jar? Absolutely. So maybe even thinking about how to secure, a place where you're soliciting donations on a desk, camera coverage we talked about.
Right.
A lot of good comments in here. Go ahead, Jackie.
I think also, Jen, I have seen nonprofits create really bulky, really heavy things like iron buckets. That's not the right word, but like an iron kettle or something. Or a library I know has a dinosaur that has a long neck and that you put the coins in. And that would be very hard to walk away with it as it's probably about 5 feet tall.
Especially for you. Especially for you to walk away with. I see someone noted in the chat that they're going cashless to start the new year. So that I'd love to hear how that goes. And I see other comments, internal inventory of equipment and tools, not just inventory you sell at your organization. So I think that resonated.
Right. I hear there's a question here. What if someone wants to hand a staff person a cash donation? I would say if that happens to one of your staff people, I'm just thinking like I sat on a library board. I'm sure that actually happened fairly frequently. Like sometimes people overpay their fines, right, to give a donation. I think that you need to train people and, make them aware of the fact that, you're paying attention to that, that there should be multiple people there if you can. If you can't, have some cameras, but let people know that it's happening, right? And that you're going to be looking for that type of thing. Jen, anything else that you see? We got 2 minutes. Let's go.
Yeah, Yaki, there's one in here that says, do we have any recommendations for a password manager? So again, not endorsing, but I'm aware of LastPass, Dashlane, and I'm sure if you do a search in, Copilot or an internet search, you could find a couple more. There's definitely many out there that are really great that add good security for your passwords. And they're great because you just need to know the password that gets you into that manager. The rest are then stored. So that it's a really good practice. We shouldn't be using Excel spreadsheets. We shouldn't be using sticky notes. All of that was kind of in line with that conversation we had when we talked about the sticky note monitor.
Somebody also mentioned when we were talking about like late audits and 990s, don't forget that external auditors may delay release as their time gets tight near year end, which is true. Like there is a bottleneck there. There's only so many auditors and there's only so much time in a day for the auditor to complete audits in 990s. So there was a good question here and I just lost it. Who should
You have 10 seconds. You have 10 seconds.
I got it. Who should have authorization to withdraw cash from the bank or make changes at the bank? Jen. 2 seconds. Okay. All right. So I would say that usually your board has to do it. You have to take something to the bank, like a resolution from the board that says that these are the authorized signers on your account. And there should be a signature card with your bank, and you should have a copy of as well.
Yeah, sorry, I'm reading more chats about your external auditors may delay release of audits. There are other factors. It's not always fraud for sure. And especially right now, single audits aren't able to be issued because of government stuff. All right, I think we're out of time, but thank you all for joining us today. Reach out if you have any questions we weren't able to get to. That's it. Thank you.
All right. Thanks, everyone.